And so I wanted to start with this story in the Wall Street Journal. Cryptocurrency surge leaves global watchdogs trying to catch up. Again, this is another story about just feeding into this narrative that it's crypto that's causing all of our problems. They're they're not paying taxes. I think it's nothing could be further from the truth. One thing about blockchain is that everything is entered and recorded in the blockchain. So all transactions are there, and you can see all transactions. And so yes, the IRS was a little bit behind in that they didn't know what it was, like most people, and how they should tax it. I think that's still up in the air about how they're going to tax it. Right now, it's property, and that's the way they decided to tax it. So the first one, this is the story of what you need to know about cryptocurrency and taxes. Okay. They talked to a CPA. The CPA says the IRS is taking a key eye on it, on cryptocurrency. They have a very big interest if you have cryptocurrency. As a matter of fact, on the front page of your Form 1040 in 2020, the IRS is specifically asking, and here's this, so let me pull this up. At any time in 2021, did you receive, sell, exchange, or otherwise dispose of any financial interest in any virtual currency? Actually, this should be 2020, right? Because but this was in last year's. It's going to be in again next year. They're asking the question. Anything, at any time, did you receive, sell? So again, very broad definition. And remember, with your tax return, you are answering under penalty of perjury. So you can't lie. You go to jail if you lie. It's perjury. So anyway, there's the instructions there. They're specifically asking, the fact of the matter is, if you have a virtual currency, you'll likely need to report it. Well, I've been saying that for some time. And not because you're trying to be honest, because these exchanges also, some exchanges are actually going to be sending the IRS a form and sending you a Form 1099-K saying, hey, these are the transactions that you made. They're not, some aren't. They're trying to make all do this. Like foreign banks, like remember the Swiss banks used to keep things confidential, but not anymore. They tell the IRS everything. It's the same thing with these exchanges, right? They wanted to be anonymous, but they're not going to be anonymous. They're going to tell the IRS everything. So don't count on thinking that you're not going to be able to, you're going to be able to hold currency without them knowing. Of course they're going to know. And then there's going to be severe penalties if you don't report it. Young explained what you need to know about reporting cryptocurrency transactions of profits or losses. It's going to come in a couple of different buckets. The IRS is going to treat you as if you're basically selling a capital asset like a stock. As I mentioned, it's like not like a stock. It's more like property than a stock. So if you bought a cryptocurrency and held it for more than a year, you're going to report it as a long-term capital gain, like all property. So your tax rate could be as low as 0 or up to 20%, depending on your tax bracket. If it's held less than a year, it's going to be a short-term capital gain. So it's really important for people to realize you can trigger this by selling your crypto for cash. So you had crypto and you converted it into a fiat currency, which is any other currency, dollars, yen, pesos. That's a fiat currency. That's going to be a taxable event. Anytime you change, let me read because I think they talk about it in here. If you exchange it from one cryptocurrency to another, that's another taxable event. What we see is a lot of people will take their cryptocurrency and buy something. If you took your crypto and you bought a good or service, you've triggered the taxable event because there's going to be a gain or loss. So those three things could trigger you having to file a short or long-term capital gains. Be very, very careful because in the background, the IRS is getting this report and they're not going to look too kindly on you if you don't report it. This happens to a lot of people, and I've got a lot of customers or clients who's this happened to, that they get reported. They didn't know that they were supposed to report all these transactions. And so the IRS gets a 1099-K, as they mentioned here, and my client didn't know, and also they only put the trades that you made, not the gains and losses. So I have one client, looks like he traded $10 million of cryptocurrency, and he's being taxed on $10 million. But he didn't have $10 million in profits, and because he didn't report the losses on there too. So you have to do that too, and that's the scary part, and that's why you have to keep good records. He noted that many people are getting into mining. So crypto mining, that's converting, that's working along the blockchain process to verify a transaction, and you get crypto for doing that. And there are considerations there too. So mining is going to have possibly two transactions. The income you receive from mining the cryptocurrency, that's income, so you're going to pay an income tax on that. And as a sidebar note, the expenses that you have related to mining will be deductible. But when you sell the cryptocurrency after you mine it, you're going to be triggering capital gains. And he says that there's deductions. But if you're not in business, if they'll call it a hobby, you're doing this for fun, they may not all be deductible. So you have to be very careful. Also, what you see often in businesses are accepting crypto as a form of payment. So it's different than if someone pays you on a credit card or cash. It's income, so you need to report that. Sometimes your currency will hit a hard fork. We know what a hard fork is, right? It's when they divide it. It gets divided. If you're into crypto, you're going to know what a hard fork is. And airdrop is kind of like a free giveaway and winning lottery. So you might get that, or even getting crypto rewards. Those are just some examples of other transactions where you might need to report that. The bottom line is the IRS is taking a very hard look. So if you have crypto, you want to make sure you're reporting it and looking at your 1040 page. One, there should be no excuse for missing it. The IRS put it right there in plain sight. You're going to make sure you're recording your cryptocurrency transactions, or you have a significant problem with the IRS. So that's again, this is kind of a repeat what I've been telling people all along. That it's, when it's taxable, whenever you get crypto or get rid of crypto, buy something anyway, it's a taxable event.